And a recent report by Ooba Home Loans is showing that despite a high interest rate climate, opportunities still exist within the South African property market. That report measuring activity in the first quarter of this year shows that some properties are becoming more affordable. That's relative to household incomes, as it reveals robust activity in the middle to higher end market. Ooba Home Loans CEO Rice Dyer speaks to us about this development. Good morning to you, Rice. What's become apparent is that at least it's not all doom and gloom. Talk us through this quarter one report.
Good morning. Thank you. Well, we've definitely seen a reduction in the number of applications coming into the business. Volumes in terms of customers looking to take out home loan applications is down around about 20%. So as demand is slowing, as one would expect with interest rates having increased so significantly, we are seeing property price growth starting to slow as well, which does create some opportunities in the market for homeowners looking to get into the market. Obviously not such great news for people owning homes at the moment.
What's also an interesting development to note is that buyers are now sitting at an advantageous position. Tell us more about that.
Yeah, so we're definitely seeing salaries. If you look at the Stats SA numbers, salaries in general on average across the country growing quicker than house prices as demand has slowed. So, residential properties becoming relatively more affordable. The challenge obviously is that given the increase in interest rates, that repayments have gone up significantly more than salaries. So people are spending more and more of their disposable income on repaying debt than they were, say, a year ago. But I think from a positive perspective, bank lending is still very, very strong. There's strong competition in the home loan market amongst the various banks. Approval rates are still very, very high. We're seeing approval rates in our business of over 80%. Interest rates that banks are prepared to offer are still significantly lower than they were last year, and availability of 100% loans. So the ability to still get those 100% loans is very much there. Over 50% of our customers are getting 100% loans in the market still.
What then is to be expected when we look at the footing that both the banks are sitting on as well as home buyers in this scenario? In terms of a near-term outlook, the climate may change because with inflation at 7.1%, it could mean yet another interest rate hike from the South African Reserve Bank, which then further changes the picture of where we sit when we acquire debt, particularly for mortgages.
Yeah, so I think it's certainly the consensus among economists is that we'll see further interest rate increases probably at the end of May and then potentially further beyond that. So that is going to slow demand even further in the home loan and in the property market. But again, to the extent that you are looking to get into the market, we're pretty close to the top of the interest rate cycle, we think. Maybe another one or two small increases. But to the extent that you can afford to get in now, demand has slowed, as I've said, so property prices are falling, and there is certainly opportunity at this point in time, given where banks are lending and banks are still seeing opportunity in the market to become certainly for first-time home buyers to get into that market.
Thank you for your contribution. Rice Dyer is the CEO at Ooba Home Loans, talking to us about opportunities that still exist in a high interest rate environment within the property sector.